Sentiment is still low. The price is high. Senior gold miners are undervalued.
Let's start with gold. What do you see as the current catalyst driving gold at this point in time? Are we still in the early stages of this bull market? And any thoughts that you have on the potential opportunity presented by the gold mining sector at present? Christopher, I'll start with you on this one.
Yeah, I mean, the drivers for gold are definitely not happening out of the West. That's one thing that I can say for sure. I mean, I've been involved in this market for 17 years now. So I've been through the 2011 peak, the 2015 drawdown, the global financial crisis. I know what a peak looks like as far as psychology amongst, let's say, the average person in the West, or the person you might see at the gym or at church or at school, et cetera, et cetera. We're not seeing kind of psychology now like we did in 2011, where the average person is becoming interested. So it's telling me that most of the buying is still happening out of the East. It's happening out of central banks, large sovereign wealth funds, et cetera. Maybe some buying coming out of the average person in China or India. But as far as I'm looking at the gold market, I mean, I can say that maybe this market has gotten frothy over the last month or two as far as absolute price chart, but I don't see the kind of psychology that would be reminiscent of a long-term top right now. I'm curious if Wilhelm has seen similar.
Yeah, well, I agree. The large demand is coming from the sovereigns, and this is like a huge shift. I remember starting to invest professionally around 2007, 2008, and checking what the Chinese demand for gold was. It was almost non-existent, and that only started after the collapse of Lehman, that China really started to buy into this market. And now it's not just China. Look at the Polish central bank; it's growing their gold reserves 10x. Same for the Czechs. So I would say all countries east of Germany are adding to their gold reserve. And then the European countries stopped selling gold and are repatriating gold. So this is a very strong market. And this has to do, of course, with the bifurcation in geopolitics. You have the West against the rest of the world, and the rest of the world, let's say the BRICS alliance, they're fed up with the current gold dollar system. And when you buy gold, it's the anti-dollar trade. You actually vote against the dollar. So the dollar system is at risk. Trump is creating, he's trying to isolate China, but he's in the course of isolating the US. So I think this anti-dollar trade will get stronger. So I think we're still in the very first innings. And that's also visible because, like we just agreed, silver is not participating yet. Only the senior gold producers have been going up quite a bit, but the junior space is still at rock bottom level and is just starting to break out. So according to our analysis, the major recovery of our markets is just starting now. So we're closer to the beginning than to the end.
Yeah, and some very interesting comments about sentiment there, Christopher. I noticed you did a poll on X where you asked how many people around you know anything about, this was when gold hit 3,000, know anything about gold hitting 3,000, and everybody answered basically nobody. And it's interesting because we live in our bubble of doing these type of shows, and I'm talking about gold every single day of my life. So I just assume, well, everybody, but nobody, you talk to your average person, they're just completely confused by what do you mean? Yeah, so that's a really good indicator. I do want to dive deeper into the gold mining sector. The theme of that conversation for a few years now has been, why aren't the miners keeping pace with the gold price? Normally in gold bull markets, the miners perform much, they're kind of a levered play on gold. For a while that has not been true. It seems now some of the majors are starting to wake up. What are your thoughts on the gold mining space today, and where are you looking for value? Do you think the majors, your Barricks, your Newmonts, your Agnico Eagles still present an attractive value proposition? Do you think they could be overbought and it's would serve people more to look at the developers and maybe even the explorers, obviously depending on their ability and how much time they have to do due diligence? Christopher, what are your thoughts?
Yeah, if I can just go back to that sentiment thing for one moment, Jesse, and
Yeah.
I won't spend too long because it's so key. I just want to give one anecdote from my own career going back 2010, 2011. I started investing like 2007, 2008 in this sector. And in 2010, when gold finally broke higher above $1,000 per ounce and it was 1,200, 1,400, 1,500, I had in my wider walk of life, I had probably 30 or 40 individuals coming up to me, asking me for advice, asking me for which gold miners I like. I don't mean professionally. I mean people that I knew walking about town, people at the gym, friends of friends, my dentist, for crying out loud. And that was back then. That was with gold not even at $2,000 per ounce. Now with gold at 3,000, I have one single individual in my wider walk of life, and it's my sweet aunt, who I love very much, and she's asked me about gold. Aside from that, no one is interested. So to talk about where the value is right now, sentiment is still low, the price is high. Senior gold miners are undervalued, yes, compared to where they should be. Let's call them moderately undervalued, but egregiously undervalued, absurdly undervalued are the defined resources in the ground. We're talking 1, 2, 3, 4 million ounces of gold in the ground that are selling for $10 or $20 per ounce in the ground. Whereas in the last cycle in 2010, 2011, when gold itself was lower than it is today, the defined resource companies were selling for $50 to $100 per ounce in the ground. You just think about that metric, 10 or so X higher in the last cycle compared to where we are now. I think that's the value proposition right now.
Very interesting. Willem, your thoughts?
Yeah, I think we're in a show me the money phase of this recovery. And if you look at the valuations, I agree with Christopher. Look at Newmont and Barrick. These senior producers used to trade in the past cycle at two times NPV, and now they're at zero point 0.7 or maybe one. And the price earnings ratio is often in the lower tens or even sub 10. So that means you can still buy very cheap. And now the margins are exploding. And actually, the producers have a license to print money now. And I'm afraid that gold won't stop at 3,500. We might see 4,000, which even says Goldman Sachs stated that recently. We might see 4,000 in the middle of next year. And I think we'll see 4,000, 5,000. And then the real revaluation, the central banker initiated revaluation of gold still has to start, because don't forget the balance sheet of central banks are stretched and they need to revalue gold to to improve their balance sheets. And of course, I run a fund. I'm a fund manager. We see the inflow is starting to pick up, but this is mainly the smart money. This is mainly the ultra high net worth, the people who have to invest tens of millions, and they understand it. But the retail, I agree with Christopher on this. The retail is still in a wait and see mode, because on top during the top of cycles, we always see this huge inflow of the retail crowd, but we haven't seen that. That hasn't started yet.